right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday. Yes, Wednesday, May 31st, 2023. End of the month. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the channel. Let's go ahead and get started with futures. I mean, it seems kind of quiet, right? Not a lot going on. And I think I'm kind of just in that zone that so much has happened the past couple of days. So much upward volatility that, I mean, getting a nice quiet day isn't the worst thing in the world either. Dow Jones futures down 115, NASDAQ down about 0.51%. S&P now at 4194, down about 0.5%. 1762 on the Russell, down about 0.5%. Crude oil taking a hit, 67.24 a barrel. We talked about many times on morning notes that in regards to oil, anything above 80 we're looking to go long, but we're starting to slide down a little more, even into the summer peak driving season in June and July, which is very interesting. Gasoline futures down about 2.21%. Gold futures 1980. I'm looking at 1985 for a possible short-term long. 2338 on silver futures, up 0.63%. Copper is down 1% this morning. Euro dollar down about 53 pips, 106.80. 139.81 flat for the dollar yen. 123.64 down 44 pips for the pound dollar. And Bitcoin and Ethereum are both red. Bitcoin down 3%, 27.170. 1874 for Ethereum, 2.3%, which is kind of reflecting the risk-off sentiment since we just had a crazy last week. Volatility index 1801 this morning's print. We have a gap to fill that we talked about yesterday. We filled the first one. If you guys remember yesterday, we talked about that gap to fill. Where was it? It was right here. This was the gap. It was a 1793. We filled that. We still got one more at 1999. So again, I expect to get that filled, and then once that does, we'll probably bounce. Where does that put us on the S&P? Probably around 4155, kind of that same zone that we've talked about ad nauseum now for months. Again, a nice little retest, see if the bulls bounce, defend that, and we can play it. If we get a continuation. The really only reason that we would really pull back, we'd probably need some kind of, headline regarding the debt deal that's not going to pass. So there is no confirmation or any reason specifically other than just technical patterns why the volatility index or the VIX would spike. So that's really not enough to trade it by. I think your best bet is to look at the individual names, see what's a little hot, see what's a little not, and probably the best thing right now is to just sit and watch. Take a look at 10-year Treasury yields, 3.673. That's down 104.46 for the dollar index, and the VIX is at 1801. So that's where we are. In terms of what I'm looking at, Palantir does have a gap to fill this morning at 1386. This was the upward gap we had yesterday. If we fill that gap, it really doesn't change anything. We're still in an upward trajectory, 20-day highs. You're talking about 52-week highs. We broke this key level here of around 1464. We're now at 1412. Again, the expectation is that we can ride this whole train of Palantir if we get that squeeze in AI stocks, which is definitely possible, up to around 2396. So again, this is something to look for. Again, I'm a Palantir shareholder. Is there any reason to buy shares here? Well, not really. I would expect a little bit more of a pullback, maybe back to 11 if we do slide a little bit as well. The 20-day moving average alone is at 1036. Why not get a retest there before you buy? I think what I told Investment Club yesterday was that it's a better ROI right now to just play upward options calls while we're having a bullish moment or bull market, if you will. And then when we start sliding, that's when we start picking up the pieces and seeing what's available out there. Things are just a little overvalued. Let's be completely honest. We're starting to get into bubble territory in terms of QQQ versus IWM on a relative basis. Nvidia's price to sales is in the 30s. Not even price to earnings, price to sales. That's Sun Microsystems territory, which again in the dot-com bubble blew up and was bought by Oracle years later for about a fraction of what it's worth. So I'm not saying Nvidia is a bubble. No, not at all. And again, I've loved Nvidia really since '88. That's how long we've had that stock, since in the '80s. So again, as an Nvidia shareholder, I love it, but it's due for a pullback technically. I mean, it's not like the worst thing in the world if we do. So again, investors, you're really just enjoying this as a trader's market for now. And you got a really big gap here at 319, guys. You're more than likely going to fill that, and that's okay. The question is, do the buyers defend the zone of 300? So again, if you have Nvidia right now and you're a person that's looking to make some money on your shares without selling, you could always sell upside call contracts, but that's very perilous because we know how the implied volatility now is on Nvidia. It's moving 4%, 5% on a daily clip now, moving like a penny stock. So best bet would be, if you're an Nvidia shareholder today, is to just not even look. Just leave it alone and just be happy. And if you need the money, sell it. Sell some, fine. But it's the same stuff with Microsoft and Apple and all these names that soared. Metaverse too. I mean, you just look at your report and you're just happy that you held on and you went through a bear market officially, and that's a really good thing. So you should always be content with that. But Palantir definitely on my radar. I did see some put sweeps on, or some elevated put activity on Disney. Disney's starting to get very, very ugly. Take a look at this. 84.07 is the, wow, what is it? The 1-year lows. So 52-week lows, the expectation is we get there based on the volume. If you go to Disney, again, the volume I saw was all in a consistent range around 85 to 86 for multiple dates, multiple expiries, June 9th, June 16th, June 23rd. It got it through all the way through July. So there is some heavy betting to the downside on Disney. Do I consider it an ETRN UOA if you guys caught it? No, I don't think it's a UOA like that. But usually when you're seeing the options market move, keep in mind, the ETRN was more than likely, an inside deal, and they didn't want to buy shares. So what did they do? They bought options. But again, if you're a day trader and you actually read this stuff and you look at the options chain, you can find these kind of spikes in volume, and it could be insiders, it could be someone who knows something. It doesn't mean we can't ride the coattails either. It doesn't work for every single stock, obviously. So again, obviously do your homework, look at the charts, see if it matches up with the fundamentals, and you should be okay. So I don't think Disney is that kind of trade, but I expect more downside from it. So we'll see what we get. And I think when you start getting to around the 80s on Disney, it wouldn't be that bad. But again, it is relatively expensive because they still need to make more money in terms of their PE multiple. Let me go and take a look quickly on what their multiple is in terms of Disney. Let's see, if we go to we'll go to current PE multiples. Yeah, Disney is trading at a 38.95 price to earnings multiple. If the price to earnings multiple, if the price of the stock were falling, the PE should be as well. But it seems that even at 40, I mean, this is more overvalued than Meta, more overvalued than Google, and it's right below Netflix. So, and it is a little cheaper than T-Mobile, but you're getting to it's still expensive. Disney, even though the price is falling, Disney is still expensive. And that sucks to see because I'm a shareholder too. But if you go by a forward basis, based on their guidance, Disney's at a 1638. So the question is, do you believe in Bob Iger? Do you think things will change? These are the questions you need to ask yourself as a shareholder. And if this is just too much work, guys, your best bet is just to buy an index fund and just move on forward. In terms of the stock market today, let's go and take a look at S&P 500 futures. I am seeing an inverse head and shoulders, at least on a diagonal basis, kind of on a sideway. You're kind of near that neckline, so going short here would be kind of difficult. But let's go to the daily and see if there's anything that we can look at. We are way above the 20-day moving average. Maybe we get a retest of that, but guys, even that's 33 handles. That's not exactly the worst thing. It does line up with that 4150. So if we get a little more weakness today, maybe we get a little bit of a VIX spike, we can start getting the 19s and the 20s. Again, guys, we'll be at 4150 S&P. Is that worth a short for really, 30 points? Kind of a scalp in it? Maybe. I don't think that's the best setup. I think NASDAQ is a little better. You broke down below the 38.2 fib now, 14,367. You're about 40 points away from that. If we start breaking below 14,300, we can start taking a look at targeting 14,000. And again, that would just be a retest of the breakout from the 26th. So that's all we're doing. Just looking at measured moves, going on the way up, going on the way down, and we talked about a structured bull market. What we want, guys, is continuing upside of these asset prices with nice little pullbacks and buyers defending those pullbacks and defending those gains, those prices at levels of support. We don't want Dow 1000 up 1000 in a day, because guess what? You're selling that. And of course, well, I guess you don't want Dow 1000 down another day, because that'll just screw the sentiment of the market. So I think the market at this point seems to be rather confident, but it seems to be a clashing of ideas between we're going to have an imminent recession versus everything is all clear and the Fed is still raising. So one thing I don't hear a lot about now is inflation. So at least that kind of narrative is shutting down. So now we're probably going to be talking about economic slowdown. I think the word recessions are going to be start taken away from the lexicon as CPI does continue to fall, and yet GDP still remains pretty strong, and then it's labor market. So once the labor market starts to crack, that seems to be the signal of where we would get some rate cuts. But we're nowhere near that. I mean, we're at historic high employment rates pretty much since the 60s. So I wouldn't expect a rate cut anytime soon. If I'm the Fed, I'm still raising because everything seems to be okay. Look at the NASDAQ soaring. Look at S&P moving higher. I mean, it's better off just to add more ammo for the next crisis. There will be one, I'm sure. And that's one way they can fix it. So we'll see. Other than that, guys, rather quiet today. It is a short week. I did buy trades, calls for next week and the week after, respectively. So it's good to buy some time. No need to worry about this short-term volatility. If we're wanting to scalp, more than likely we'll just do futures instead of QQQ or SPY. I just need to see a little more volume. Yesterday wasn't a ton. We had tons in the morning, and then it was sold off immediately. All the chip stocks were pulling back. So that's kind of what we've been seeing. Like Europe was buying it, America selling it today. Europe is selling it. Let's see if the Americans buy it. That's it. We'll go and leave it there, guys. Have a great rest of your morning. Happy Wednesday. Make it a great trading Wednesday. And I will see you guys tomorrow for the next morning note. Cheers.